Uber, Bitcoin, self-driving cars. Combine those three together, and you have the self-owning taxi. A car that is a corporation that owns itself, pays for the car lease, the car insurance, and the gasoline from the revenues it makes, giving passengers a ride, and there's not a single human involved in that matter.
Bitcoin. You came on our air during the early part of the pandemic. I think it was trading at $8,000-$9,000 a coin. And you said, I'm in. And I think you wrote it all the way up to $60,000 and we then wrote it back down to $15,000, and we're now sitting, I think, somewhere around $27,000.
I've never sat on a horse that long. Just so you know.
So what's the? You're still on the horse though.
From the beginning, I've always said I want to have a small allocation to it because it's a great tail event. It's the only thing that humans can't adjust the supply in. So I'm sticking with it. I'm going to always stick with it as just a small diversification in my portfolio. What do I think right now? I liked it last December. I still think I mean...
Would you buy more right now?
Would I buy more? I would probably... I look at it in gold, and I think they've done so well recently because of the fact that we have had these great risk premiums. I wonder whether they may not be boring in the future. Also, Bitcoin has a real problem because in the United States, you have the entire regulatory apparatus against it. So it's just kind of yesterday's news. And if inflation's truly done a bit, if that story's been played, then you have to wonder. We were buying gold and Bitcoin for the inflation hedges. That game may be over. I would, in 6 months ago, before AI, before the possible productivity boost that we'll get for it, I would have said a completely different story with regard to the inflationary future and with regard to all the inflation hedge.
And guys, we have Paul Tudor Jones says Bitcoin has a real problem in the U.S. and says since inflation is behind us, Bitcoin and gold may fall out of favor. And then he also says because of AI giving us a lot more productivity. And guys, we know what he's talking about. The robots, algorithms, and drones taking over the economy. They don't need a lunch break. They don't call out. They work 24/7. But we know these billionaires and fund managers don't talk about the fourth industrial revolution to the masses. Bitcoin, crypto, and gold is all about putting the globe on an even playing field. And remember, the crypto teacher told you. Now let's get into the video. Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have Paul Tudor Jones on CNBC. And we know these billionaires, fund managers, they only give us half the truth. And he says that stocks can get higher by the end of the year. And is asked about Drunken Miller's comment that the United States can see 10 years with no growth. And he agreed. And guys, who bought you that first? That's right, the Crypto Teacher. I bought it way before Drunken Miller even stated it. And we know Blackstone stated that a couple years ago. I've done a few videos on it. And we know the real reason why Blackstone, Drunken Miller, and Tudor Jones agree because they know all about the fourth industrial revolution. Like he talked about AI productivity boom. And guys, what is he really stating? The fourth industrial revolution is about to take over. Where the robots, algorithms, and drones take over the economy and the sheep go inside the metaverse. And we know the fourth industrial revolution goal is to take humanity out of the workforce. Now, do I see stocks and cryptos moving up towards the end of the year? No, I do not. But of course, guys, we're still going to have pumps and dumps. But we know the beginning of 2024, the emerging markets are going to start flipping that switch. And that's when we're going to start moving up. But it's going to be due to the emerging markets, and the United States is going to be sitting on the sideline. And Paul Tudor Jones calls it debt ceiling theater. And guys, we know that's what it's all about. But the debt ceiling, once it's signed, guys, we know a lot of liquidity is going to be moving out of the market and yield rates are going to start moving up. And that's why I say, on the whole, I don't see stocks and cryptos moving up. But like I stated, in certain sectors, you're still going to have pumps and dumps. And then, guys, are the Fed done? Yes, they are. And we know these rates take a while to get inside the market. It normally takes 12 to 18 months for interest rates to work its way into the economy. And we know a lot of these businesses, corporations have to go and refinance this debt. That free money time period is over. The reason why, guys, because we know the NWO has to destroy this legacy market for the fourth industrial revolution can rise. America to Babylon 2.0 falls along with the United States world reserve currency and the rise of the BRICS nations, the emerging markets led by China the Dragon with that digital yuan backed by that digital SDR. And remember, the crypto teacher told you about it and wrote about it a long time ago because he knew when it came to the New World Order, it's all planned out. You have a wonderful day.
But let me just pick up on what you just said. You just said you think equity prices are going to go up this year.
Oh, yeah.
So you think they're going to end higher than where we are right now?
Oh, yeah.
Okay, real economy is going to be...
Could go into recession in the third or fourth quarter. And when I say we're going to be higher, I'm not rampantly bullish because I think it'll be a slow grind. You just got, as we had, if I go back to the 06, 07, 08 episode. We stopped hiking in June of 06. And even though the economy was decelerating, the stock market ground higher for another year and change. And I look at the flow of funds situation, which is what I like to look at in 06, and I look at it now, and they're very similar. We've got $1 trillion of buybacks. We have no IPOs, no calendar, no secondaries. Valuations are at 19, but nobody's rushing to offer. So clearly, something is going on internally in the stock market, and by that I mean from a flow standpoint, that's constructive.
Let me ask you this. We had Stan Druckenmiller, who was on the air just last week, I think, and he made this comment that given the remarkable margins in corporate America today, he said it's possible that stocks don't basically move anywhere for 10 years.
I think we're in just a big, massive trading range. I think on that point he's correct. We're in a multi-year trading range.
Right.
But if you had asked me 6 months ago, I'd probably give you a different forecast on long-term inflation, and I'd give you a different forecast on the stock market.
Okay, but you think that for 10 years we might be in a trading range for the next 10 years?
Well, I think we're going to have a more bifurcated market than we've ever had over the course of the next 5 or 10 years, because I do think that the introduction of large language models, artificial intelligence, is going to create a productivity boom that we've only seen a few times in the last 75 years. So, just to be clear, if you think about the big productivity miracles that we've had since the war, you had one in the late 50s, which was really a delayed reaction to the infrastructure investment post-war in the early 50s. Then we had one in the 80s because of the introduction of the PC.
Right.
And then we had one in the 90s because of the introduction of the internet. Each of those three episodes were associated with productivity gains of somewhere between 1% and 3%. So let's say that this large language model is going to give us a productivity boom of 1.5% over the next 5 years per year, which I think is possible. We've had the fastest adoption of them in history, right? So if that's the case, and I just go back and look historically what that's done during those productivity miracles, you've had the stock market on average kind of appreciate 15% per year. You've had inflation come down. This is literally a gift to the central bank. Say 30 to 50 basis points, certainly in the early years. And you've had a PE expansion of somewhere between 1.5, 2. So I think this one, will be more bifurcated than it was back in those other ones. But yes, that makes me think the tide is coming in for the stock market.
Okay, layer into this, though, the banking crisis that we're living through today.
Right.
And the debt ceiling debate.
I'm going to need a model to figure all this out, right? So the debt ceiling debate reminds me, I just had my first granddaughter 3 weeks ago.
Congratulations.
And I forgot, thank you very much, I forgot when you're holding that baby that after they've been feeding that they tend to do a little throw up all the time, right? So I think that's what this debt ceiling is going to be. It's going to be kabuki theater, a little throw up. And the real question is, where are we going to be a month from now? A month from now, after it's resolved, then where are 2-year rates? My guess is they may be a little higher. There's risk premiums in everything. Risk premiums in gold, risk premium in stocks, risk premium in rate structures, because we're all terrified of the debt ceiling. So if those are gone, stocks are probably a little higher, gold's probably a little lower, rates might be a touch higher, because those risk premiums will disappear. So that's the very shortest term.
So you'd buy on that if you think a deal gets done?
Yeah, I think you'll have some kind of indigestion along the way, and yes, I'd buy that.
But I actually want you to react a little bit to this Austin Goolsbee interview and some of his comments. I'm curious where you think interest rates will go, should be. What do you think?
I think they've done hiking. I'm so glad I don't have his job, because listening to these guys try to not say what they really want to say and what they really think.
What do you think he really wants to say?
Oh, he wants to say we're done, we've gone too far, and enough's enough. That's what he wants to say. He just can't say that because he's new on the board and he has to follow the chairman. But that's what he wants to say.
And what do you want to say? If you
I think he's right. I think they're done.
You think they are done?
Oh, definitely. I think they're done. I mean, they could probably declare victory now, because if you look at CPI, it's been declining 12 straight months. 12 straight months. That's never happened before in history. So there's a strong downward arc to inflation at the moment. 2-year break-evens are under 2%. Clearly, they have to be governed by trailing 12-month inflation. But if we get to the here and now, you can see that inflation, to a great extent, has been wrung out of the market. Now, does that mean that we're getting ready to imminently cut? No. But you got to think of interest rates a bit like chemo. So chemotherapy, chemo is poison. Interest rates, with the kind of amount of sector-wide debt that we have between private consumer and the government, we're probably at levels where we've typically hit a recession in the past because of the interest tax on the economy. So we're at a level that historically has really slowed the economy and historically has kicked off a recession. I think it's just a question of waiting for that tax on the economy to work its way through.
Mistake then for them to raise interest rates?
Would have been a jump ball for me. I would have been 50-50 on the last one. I could have been talked out of it. I would have been reluctant to do it. The only reason why I probably would maybe have gone along with it is because I think equity prices are going to they're going to continue to go up this year, and the financial cycle drives so much of the business cycle. Okay. So
going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology So it's going to be CBDC in a box provided to you by the People's Bank of China.
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.